Nahara there, and let's bring in Chidu Narayanan, head of APAC Macro Strategy at Wells Fargo. So Chidu, thanks so much for joining us in studio, and it's great to have you here from Singapore. But let's talk about the direction of the yen, because of course we initially saw quite a big reaction in it on the expectations you'd see the BOJ easing rather, but where do you think we go from here in the nearer term, because we still have a lot of things that aren't settled yet?
That's absolutely right. First things first, we've got some clarity on the near term on the government. We could possibly be seeing Takaichi-san be nominated as the Prime Minister take over as well. That has assuaged some of the concerns for markets, which led to the bit of a yen rally. But near term, we do think that there is still political uncertainty. We don't. It's still a minority government. We still don't know what the policies are going to be like you just discussed. And all factors point towards potential fiscal stimulus, which, depending on the composition, might be good for growth, but it will still definitely weigh on the JGBs, which will then weigh on the yen as well.
She's known to be almost like a protege of Abe. Does it feel like this? We could get back to that sort of era once again in Japanese markets?
Right. That's been a question that we've got a lot over the last 2 weeks at least. A few differences. She is definitely cut from the same cloth, but the background is very different. When Abe took over first, dollar yen was trading much lower than where it is right now. So the impetus was for the three-pillar approach, the three arrows of Abe, which also included dollar yen substantially higher. Yeah. And you also had Kuroda-san as the BOJ governor, who was in line with that sort of thinking. Right now, you have much more pressure on JGBs. You don't have the same amount of fiscal space. And the yen's trading well north of 100, which is where it used to be. So I think near term, probably a little bit less of a wiggle room. Yeah. That being said, I still think that we could see a lot more fiscal easing coming from Japan. If you look at the upper house elections, that was the cornerstone of all of the opposition. That has been a key cornerstone for Takaichi-san as well, possibly why she won the LDP leadership, a change from what they've been doing recently. Yeah. And near term, that should be supportive for medium term supportive for growth, near term weighing on the JGBs and the yen.
What about the flip side of this, which is also the global story and the haven demand that we've seen for the yen as well?
I think that's very important. Probably that's what's keeping dollar yen at 150, 151. We expected dollar yen to be range bound between 152 to 155. Risks more skewed to the top side, purely from the Japanese political evolution. You've seen this the last week being a bit more of a classic risk-off scenario, which we've not seen in a little while. So it's sort of heartening to see that come back as well. We think that should keep the yen supported on the margin. That combined with the fact that if you look at positioning as well, you look at fast money positioning, hedge fund investor positioning, they are already short yen, mostly because it's a positive carry trade, and also because you can't keep waiting for the yen to be appreciating. So when that happens, they might turn around. But given the fairly extended short yen positioning, there might be limited yen downside, i.e. limited dollar yen topside.
Yeah. You mentioned about the JGB. The yield curve continues to flatten, and you're not seeing that much interest when it comes to the long end of this curve. And there's a lot of anticipation of the BOJ, whether they're going to hike this year as well. I mean, can we expect at least this kind of widowmaker trade to continue? That, short JGBs, is that going to be a still lucrative sort of strategy moving forward?
We are on that on that boat. We are bearish generally duration across the world, in the US, in the UK, in Japan. All places, all geographies do have significant fiscal stresses, very limited fiscal space. And this year, the theme that we've seen is countries in general are very comfortable to increase fiscal expansion. That was a theme right after COVID. The comfort with running much larger fiscal deficits has increased over the last 4-5 years, especially so this year. Particularly countries which have had much smaller defense budgets, and the focus has been on increasing defense budget. Now that's not going to be coming at the expense of something else. So you're going to have increased fiscal spending and an increased defense budget, which will put pressure on the long end of the curve. So we do think that the 30-year, 40-year part of the curve in Japan, across the world, will be under pressure, yields to the top side.
Yeah, and you see that pressure being very acute in the US as well. So what does that mean around general demand that you see for the dollar and that de-dollarization theme as well that's been very closely watched this year?
That's fair. I think so. We started getting these questions maybe 10 years back, 2016, 2017, and I think from Q2 towards the most part of Q2, that was the most common question that I received from clients. To unpack that a little bit, has there been a bit of diversification away from dollar assets? Absolutely. But that's coming from a background of 10 years of building up significant dollar positions. Dollar assets have been significantly outperforming everybody else, driven by the theme of US exceptionalism, significant rate differentials, and so on. So there's a bit of diversification. Is that complete run away from dollar assets? Not really. Yeah. Dollar debt market, dollar equity market, still by far the most liquid markets in the world. So there will be a definite position in portfolios for dollar assets. That being said, we do see dollar generally being weaker, not because of deallocation from dollars, but because of political uncertainty, policy uncertainty, all of that increasing the dollar risk premia, weighing on the dollar, but marginally, not a collapse of the dollar, definitely.
Yeah, especially given it seems like the weakness has stalled a bit after that 10% decline in the dollar in the first half. In terms of how we can trade the dollar then moving forward, in the near term, how do you continue to fade, I guess, dollar weakness, right, or dollar strength? Is it still through G10? Do I look at EM? What's the best way?
In the near term, we are a little bit bullish on the dollar. Maybe not a dramatic ramp up in dollars, but dollar strength continuing. We would like to do that more against risk, political risk expression. So Japanese yen, euro, particularly the sterling, and we would avoid currencies like the Aussie, which we think is already quite cheap. It's already well positioned against the dollar. We would fade Aussie strength against maybe the likes of the yen, against the likes of the Kiwi. Dollar CNH is not a trade that we would like to use dollar strength to express dollar strength. We think dollar CNH will continue to remain around current levels, probably edge down a little lower, aided by the PBOC.
Yeah, on that, then, so 710, of course, is the line we've sort of seen in terms of the fix. So is that where we trend again into the year end?
Yes, our forecast is for dollar CNH to head to 710 by the end of the year, early 7s, 705, 707 sort of levels in early 2026. Aided by the PBOC fix. We think the PBOC fix has been edging lower, and typically the PBOC fixing error has a high correlation to the strength of the dollar. That has broken down a couple of times this year. When the dollar has been weaker, the fixing error has still been strong. And if you look at when that happened, that was during periods of elevated US-China tensions. We're seeing that again, which then means that we believe policymakers do not want the focus to be detracted on the FX away from the political issues, away from the negotiations. Yeah. So keep CNY strong, keep the fixing error high, and keep dollar CNY fixing low.
Chidu, thank you so much for joining us. Chidu Narayanan, their head of macro strategy for APAC at Wells Fargo. We're checking Vietnam markets now, just opening up in the last few minutes or so. After what was that 5% drop yesterday, looks like we're seeing a little bit of a recovery there. Obviously, concerns about corporate bond issuance and the like really did weigh on risk sentiment yesterday here, but today looking a little bit better. Plenty more ahead. This is Bloomberg.